Hello and welcome to another video update here on the MCO Global Asia channel. Today I want to talk about the Nifty 50 index, and it's a very popular one. I got a lot of requests in recent weeks to cover it, so I thought we will take a look at it on this channel. Overall, the scenario here on this index chart is still bullish. There is currently no sign that a meaningful price top has formed. You see, there is still scope for higher prices. The idea is that in March 2020, a meaningful low formed at around 7,520. And since then, the market has moved higher strongly in an impulsive structure. From an Elliott wave point of view, there's a strong trending move in 5 waves. And so the idea is that this 5th wave completed waves 1, 2, 3, and 4, and we're now in the 5th wave. And so the idea, the thesis is that this year, wave 4 bottomed in April. Now, based on the data, we can determine some targets for the larger degree 5th wave. The way, or we can do that by measuring with our Fibonacci extension tool the length of waves 1 to 3, and then we go to the low of the wave 4. And then based on that, we can add some Fibonacci extensions. Specifically, the 38.2 Fibonacci extension would be the first one. But then we also have the 50% and the 61.8. Now you see they are quite far away. But technically speaking, the 38.2 extension is the first ideal target. Yeah. Now there are other ways how targets can be measured, but we would need to see more microstructure, and we haven't got enough yet. So for now, the idea is, the main thesis is, we could actually see it move towards 35,000 over the coming months, yeah, possibly years. Which also works quite well, I guess, based on the microstructure that we see right now. We will talk about that a bit more. So if we then zoom in a little bit, if the main idea is that a larger degree 4th wave bottomed there in April this year. So we also look, because the overall larger time frame move is an impulsive structure. This is the strongest trend and the clearest trend in markets. We would also look for a 5-wave move in the 5th wave. Now, the challenge I have at the moment is to determine what exactly this is. So the thesis is anyway of, a low formed in April. Based on that, we can determine a support zone. And as long as we're holding now above 22,546, there is absolutely no evidence that a meaningful top has formed. No, in fact, we can watch for higher prices. My preferred interpretation is actually that we completed wave 1 and all of this here is a wave 2. That means it's a corrective pullback in a larger uptrend. If this is the case, however, we are dealing with an overshooting B wave. What does that mean? It's part of the correction, actually. It's already part of the correction, but because the market is so bullish, the correction tries to already break out. Now, there is a technical limit, or let's say rather a theoretical limit for such a high B wave. That means as long as we stay below this resistance level that I'm going to give you now, there is still a chance to come down in a C wave and that we indeed are in this ABC structure. There's a resistance level, and the resistance or the key level that normally comes into focus here when we're dealing with such a situation, that's the 138% extension, retracement in this case, sorry. So yeah, as long as we're holding below the 26,231 level, the focus can be on this wave 2. But if we break out, we are likely already in a different structure. I would then have to assume that we might have already bottomed in wave 2, which would have been very weak, but that's fine, it's possible. So you could say, as an additional scenario, maybe currently the second most likely one, that wave 2 already bottomed. I will highlight it in blue. We can keep focusing on it. And if that's happening, the move to the upside from the August low would be part of a diagonal pattern. We would then have to see how this all comes together. But basically, we could say, hey, maybe this is a wave 1, wave 2, wave 3, wave 4, wave 5, and maybe is another wave 1. I don't want to get too technical here, yeah. But basically, we need to be aware that if the market breaks out above 26,231, we're likely going to see a more direct breakout to the upside. In the moment, the focus is on whether the market can hold below 26,231. And if it can, and we see a rejection from this area, then the C wave to the downside might not even break below the April low, might not even break below the August low. So it's the August low, yeah. Might not even break below the A wave low, which was in August at 24,350. Why? Because a C wave and an A wave, they often have a similar length. The C wave is sometimes longer, but you see, because the B wave does overshoot, the C wave might eventually end above that A wave low. So yeah, I think at the moment, the momentum is still up. What I can give you is the first key level. Okay, if we break below this level, then it would be an indication that we have already formed a top in wave B, and that would be the 50% retracement of this rally. And this is at 25,259, which means once we get a break below this level at 25,259, that's the first indication that wave B has actually formed the top. So that should give you all the levels to watch over the coming sessions. Let me know if you like to see other stocks from Asian markets or indices covered here on the channel. Let me know if you like to see the Nifty more frequently. Hope you like the update. Thanks so much. And if you like the analysis here on a daily basis, make sure you give the video a thumbs up, share it. Thanks so much. Bye-bye.